YouTube, what's up everyone? Look, Blackrock, yes, Blackrock. They just cracked the door wide open, and the second they walk through, XRP's supply is gonna implode like a soda can under hydraulic pressure. The rails are ready. The liquidity, it's heating up, and these ETFs are about to vacuum up the entire market dry. We're not early, we are absolutely perfectly positioned for the shockwave that's about to detonate, and we're gonna dive right on into it because you know what? This title, it's not hype. This is a warning shot. BlackRock doesn't just scroll into an ecosystem unless the plumbing is finished. You heard that right. The rails are polished and the partners are lined up like dominoes. Look, seriously, look around. Securitize, the exact tokenization engine that BlackRock already trusts. Wormhole, they're bringing the liquidity into chains where institutions clearly want optionality. And Ripple, dropping RLUSD, a settlement-ready stable asset engineered for real institutional flow. This isn't scattered news, it is a coordinated build-out, and everyone is just lacking to see this. When BlackRock moves, remember, they don't play at retail scale. They don't care about retail. They bulldoze in with infrastructure level precision. And every single one of those integration, it lines up perfectly with where XRP's ecosystem is quietly evolving behind the scenes. And they are timing it beautifully because the next week, you know what happens next week? We hit the ignition. You can see right up on here, BlackRock's Build Fund, the world's largest tokenization real-world asset platform. It's now on BNB chain, powered by Securitize and Wormhole. Well, that puts us over to this because what's coming? More spot ETFs. If you're not paying attention, Bitwise, a very niche asset manager, they're doing crazy amounts of volume for Solana, and Bitwise is launching next week. Canary, super small, super small. We talked about them in the first video of the day. And the fact that their ETF on XRP did more than Bitwise did on Solana, that's a warning shot to the industry that the demand is there, that everyone wants a piece of XRP. But this is the part that nobody expected to happen so fast, right? We're not just getting one ETF. We're getting multiple ETFs, all landing right as the institutional rails get plugged into place. ETFs don't just launch randomly, remember that. The custodians, your settlement layers, your liquidity partners, all of that has to be pre-wired, which means all of the back-end infrastructure, it didn't just happen. They've been building towards this moment, and now we are finally here. Maybe like a month behind schedule because of the government and the SEC, but that's okay because we are here right now in this very moment. What happens when Wall Street opens the floodgates into an asset with a tightening supply? Exactly. But before we get to supply crunch, let's talk about the people who swore that this moment that we are witnessing right now would never happen. Let's talk about them. Because look at them now, the so-called experts, right? Who said XRP would never see institutional demand. Remember the smirks, the tweets, the think pieces clowning on the idea of an XRP ETF? Yeah, where are they today? They're awfully quiet, aren't they? Listen.
Gates swinging though, right? Got an XRP launch of an XRP ETF, which was the best of 25. I think it outpaced the BSOL by about $1 million, but that was obviously a success, even in a down market. But more importantly, the regulators and like Gates swinging though, right?
In a down market, even from Canary, who is so much smaller than Bitwise, and it outpaced it. I wish that Bitwise would have launched first, and we could have had both of these on a level playing field. Because I'll tell you right now, if XRP launched on Bitwise, it would have doubled what Solana did. Let that sink in, right? Look, the volume charts just rolled out. They're brutal. The XRP ETF, it is punching way above expectations. It is pulling liquidity and attention from every corner of the market. And the same analysts who used to mock it, they're now scrambling, trying to explain numbers that they never prepared for. And here's the thing. You put something up on social media, there is always someone watching, someone who has that clip. A lot of these people are rushing to delete what they used to say, but guess what? If it hit Twitter, someone has it saved and backed up. Reality hits this hard, denial, it becomes a coping mechanism. But good luck coping with what comes next, because this is where it gets crazy. In just 24 hours, not a week, 24 hours, 149 million XRP, worth around 336 million, give or take, it vanished from centralized exchanges. Gone, pulled, vacuumed out, it's gone. It's not going back on. You really think retail did this? You think retail has $336 million to buy XRP off the exchanges? No, retail doesn't even have $1 million. This is what accumulation is. This is the accumulation with purpose coming in from your big boys, your institutions. ETFs, they demand supply, but exchanges, they're losing supply. That is the exact perfect recipe for a supply shock. The same one that the title is warning you about. But the timing gets even crazier, folks, because we move over to this. We are days away from a full-blown liquidity surge. We're talking about treasury injections kicking off within 2 to 3 days. And JP Morgan, yeah, the same JP Morgan that you're thinking about, they're calling for nearly $300 billion in fresh liquidity by mid-December. $300 billion sloshing on into the markets at this exact moment where your ETFs are launching and supply is draining. Come on now, man. This is almost too perfect if you ask me. And when liquidity floods, someone always benefits, right? Liquidity's coming in, someone's going to benefit. Question is who? Who is going to benefit? Which brings us to the question that nobody is asking loud enough. This is where the institutional angle becomes impossible to ignore. You see this genius on your screen. The digital asset researcher from Van Eck. Guy's a schmuck. If XRP holders aren't earning yield and the protocol isn't designed to collect value, then who absorbs the benefit of volume, settlement, and flow? That's what this guy wants to know. And he's the head of research for Van Eck. Does he know that his company, Van Eck, is working with Securitize, Blackrock, and Ripple, using RLUSD on the XRP ledger, using XRP at that part, and he's taking a shot at David Schwartz? I'll tell you who absorbs the benefits: your liquidity providers, your market makers, the same entities that are building rails around the ecosystem. That's who. I don't know how this guy has a job. This isn't a meme coin economy. This is financial plumbing system being built. And the people who run the plumbing, they're the ones who are preparing to cash in, which is exactly why certain media outlets are already trying to muddy the waters. I'm going to say mutter. It's not a word. CoinDesk really woke up. They woke up today and they chose violence. Let's be honest, we all been there, right? We just woke up and we're just in that mood. Well, it just seems like CoinDesk is always in that mood when it comes to XRP. They published this article right here, okay? The article's title was "Canary Likely to Hit Pause on ETF's Filings with XRP." Except that's not what the story's about. It's not journalism. It is damage control. They know the narrative is slipping. They see the ETF volume. They see the institutional rails forming. They see the supply plunging. So why media outlets push fake tension that doesn't exist, it's not because the asset is weak. No, it's actually quite the opposite. It is because they are losing control of the messaging. They want to control the narrative, but they cannot control the narrative when you have the NASDAQ, Yahoo Finance, Robinhood, all putting out the exact information on the ETFs because they can't hide those numbers. They need to be transparent with those numbers. And while they spin nonsense, your big names out there, they're doing the exact opposite. Because Eric Trump, he has openly called Bitcoin a great hedge against inflation, corruption, and broken monetary systems. That's not a meme. That is political tell. Listen.
It's also a great hedge against inflation. It's a great hedge against corruption. It's a great hedge against poorly managed monetary systems around the world. And I think that's why you see this global influx to Bitcoin. I think it's become probably the greatest asset of our time. I think it's also a great hedge against inflation.
Look, crypto isn't fringe anymore. I'm sorry to say. Influential families are all aligning with it publicly. The winds, they are shifting. They went from blowing north to blowing south. You know what I mean? And when political momentum shifts here, regulations, they follow. Which brings us to the final detonation. because Paul Atkins, yes, SEC chair Paul Atkins went live on Fox and he straight up announced that they are easing up on crypto regulations. This is a massive shift. Listen.
But basically, unfortunately, for the last several years now, the industry has been operating in a fog. They couldn't really figure out what the SEC was looking for and how this new technology could be accommodated within the ancient rules that applied to paper filings and paper stock certificates and that sort of thing. We're talking about now, digital assets and that sort of thing on chain. So what we need to do is focus on the basics again, what are securities and whatnot, and then collaborate with our sister regulators, most importantly, the Commodity Futures Trading Commission. So if you divide the taxonomy that I outline, and obviously this is my views, work through notice and comment rulemaking ultimately on all of this, but if you have digital commodities, digital collectibles, digital tools, and finally tokenized securities, and the first three are not securities, and tokenized securities obviously are. So the rub comes in defining, what is and is not a security, and so that's what we are, setting out to do.
Beautiful. Look, you don't ease regulations when markets are risky. It's that simple, right? You ease regulations when you're preparing for them at institutional scale. Combine that with your ETF launches, with collapse in supply, with your political green lights, with your treasury liquidity injections, and BlackRock building rails around the XRP ecosystem. This isn't bullish. This is absolutely historic, everyone. Now, I just want you to zoom out for a second. Stop looking at your daily chart. Who cares? Look at your 30-day, your 3-month, your 6-month, okay? BlackRock is coming in with infrastructure level precision. Multiple XRP ETFs are launching side by side for the rest of this month. XRP on your exchanges, it's cratering. Treasuries days away from injecting billions of dollars into this system. Major political voices, they're backing crypto openly, and the SEC is stepping back instead of stepping in. Those days are over. Goodbye, Gary and Jay. This is what a coordinated shift looks like. This is the anatomy of a supply shock, which is brewing. This is the kind of moment that people spend entire cycles waiting for. They kick themselves for missing it. You're here early, you are informed, and you are positioned right before the spark hits the powder. BlackRock isn't just coming. They are accelerating the entire timeline. And the market, they have no idea what is about to hit. Folks, if you haven't booked a one-on-one strategy call, if you're lost, if you don't know what to do, if you're looking for your tax advantages, setting up LLCs, that is what those calls are for. If you haven't joined the newsletter, it is 100% free. Click the link down below, put in your email, confirm that you got the email. It's a double opt-in, and you will now be on the email list, and you'll be receiving all the news and updates that cannot hit YouTube. I hope you enjoyed the video. I hope you hit that thumbs up button for me so it tells YouTube Rip's putting out good content, and we need the rest of the world to know about it. I'm gonna leave it like that. I hope you enjoyed. I'll see all y'all